Eddie Gabor is with us. Eddie, I bet that you are recommending energy stocks to your investors. Am I right?
How did you guess, Stuart? We've been pounding the table since December that we thought energy was going to be the best sector to be in. We've been overweight energy because we did not believe that inflation was going to be transitory. Now, it's taken about 11 months for consensus to finally realize that. But when you look at the energy sector, the supply-demand dynamics as the entire globe is reopening up has never been better. I mean, the setup here is just amazing for energy. And even though the market's been very turbulent over the last month, if you've had an overweight to energy, you've had a pretty damn good month. So I think energy is going to continue to lead the way. Now, I'd be careful chasing it here. It's had a really big spike in the last few weeks, but continues to be our favorite sector. And we are shocked at how many people have missed this trade.
Well, I've missed it. But look, isn't energy price inflation, okay, good for oil company stocks, I got that, but bad for the economy and bad for the overall market, isn't it? If you get a cold winter and there's a spike in nat gas prices here and all around the world, and oil prices too, if you get $100 oil, this market's not going to like it.
You know, Stuart, it's not, and that's perfect for the setup we've been sharing with your viewers. Our viewpoint is we're going to see this reflation trade spike back up here in the fourth quarter. With that, you're going to see nat gas prices go up. You're going to see oil prices go up. That's going to be very profitable. But then that's going to become a headwind for markets, not a tailwind, which is why we're going to start playing defense late into the fourth quarter. Because, look, the first half of next year, the Fed is going to have to tighten faster than they're leading this market to believe because they've gotten inflation dead wrong. And that's going to be what's going to break this market down. But it's not going to happen, in our opinion, in the next couple of months. It's next year's trade. Next
year is the problem. All right. We've got Bitcoin this morning going to $53,000.
55.
Susan's with me. $55,000 per coin. Now, that's an interesting gain. Are you guys interested in Bitcoin at all? It seems to be operating as a kind of hedge against inflation.
Yeah, so look, Bitcoin, I own Bitcoin personally. We don't own it for clients because our clients are retired and it's too volatile of an asset class for them. But I will tell you, Bitcoin, again, is playing right into the reflation trade. We've said this could look a lot like January and February. And when you look at the beginning of this year, you had energy leading, you had crypto leading, and you had small caps leading. And when you look under the hood of what's been happening with this market during this turbulence, those areas have held up really well. And so we think this rotation is starting going from low beta and defensive into some of your higher volatile names. And if we're right, again, you're going to be very handsomely rewarded as we go through the back half of October, November. We just got to get rid of this DC mess and get this debt ceiling taken care of. And that's when we'll be off to the races.
Last one. Are you selling anything or recommending to your clients that you sell anything? Industry groups or individual stocks?
So right now we are recommending incrementally getting out of your low beta defensive names. We think defensive names are not going to do well here. So like utilities, gold right now, we would be getting out of.
I hear you, Eddie Gabor.